Grid trading has become increasingly popular amongst cryptocurrency traders in the past years. And many crypto exchanges even offer one-click solutions to deploy grid trading strategies as, so to say, fire and forget solutions. However, most traders still end up losing money with grid trading strategies due to, most of the time, not understanding where the strengths and weaknesses of these strategies are, what type of market phases to use them in, and or using far too much leverage. On today's episode of The Good, the Bad and the Bitcoin, I want to explain to you the different types of grid trading strategies, their strengths and weaknesses, and show you how I personally use grid trading strategies in a process that I call continued optimization hedging to ensure that my strategies are always reflecting the market reality and not just wishful thinking. Hi, welcome back. Good to see you again. If you know already everything about the different types of grid strategies, such as long grid, short grid, neutral grid and hedging grid, feel free to fast forward a bit to the second part of this video where I talk about my own grid strategies, how to set them up and how to monitor them. Also, if you are interested in monitoring how my personal strategies are developing, which exact settings I apply to my grids and how I optimize them on a weekly basis, I've created a new Telegram channel only dedicated to this. It is totally free and I think it's a fun way to learn how to approach grid trading in a more professional way. But now let's start by looking at the different types of grid strategies. A grid strategy is a type of trading strategy that aims to profit from the natural market volatility of an asset, for example a cryptocurrency, by placing buy and sell orders at regular intervals above and below the predefined base price. The grid in this context refers to the series of levels at which trades are triggered. Once the price of an asset you are trading, in this example Bitcoin US dollar TIFA, reaches one of these lines or grid points on the chart, an order is executed. This can be either a long entry, a short entry, a take profit, a long and short entry at the same time, or a mixture of all, depending on the exact grid strategy you are using. The most common forms of grid strategies you will encounter are long grids that only use long or buy orders that are placed at the levels below the current market price that are then exited once grid lines above the current price are reached. A short grid does the same thing as a long grid, but naturally it's aiming to capitalize on falling prices, so would typically be something you want to use in a bear market. So-called neutral grid strategies are designed to capitalize on trending or sideways market, where the price fluctuates between price points that are, for example, defined by zones of support and resistance. Typically here, short or sell orders are executed when the price rises to the grid points above the current level, or long or buy orders are executed when the price falls to the grid points below the current price. If we talk about strengths and weaknesses of these classic grid strategies, we have to note that usually these types of grid work very well in ranging markets, which is something we actually have seen a lot in cryptocurrencies. However, once a ranging market changes into a trending market, be it an uptrend or downtrend, these changes often occur very quickly and with very high volatility in cryptocurrencies. I mean, we've just seen that this year, with Bitcoin phases where the price jumps up by 15% from Friday afternoon to Monday morning, or even intraday up and downs of almost 10%. If you are then invested into a classic market neutral grid or even a short or long grid, you will quickly be sitting on large losses or even have your account liquidated if you were trading with high leverage. While there is no 100% solution to this problem that can fully protect your account from underperforming in high-performance trending markets, there are a number of things you can do to give yourself a chance to still earn a bit of money when cryptocurrencies are suddenly starting to moon to the upside or crash to the downside. Instead of using one of the classic grid strategies, I am, for example, using a so-called Hedge Grid strategy. This means that once one of the price points on my grid is reached, a long and short order are opened at the same time. At first glance, this of course does not make sense because these two orders basically cancel each other out. However, over time, the realized profits that are taken by closing one of the positions once a new grid line is reached should offset the unrealized losses. Furthermore, in times where the markets start to trend very much into one direction, a hedge grid will offset some of your losses and not strain your margin as much as a classic grid trading strategy. In the next part of the video, I will walk you through the process of how I set up two of these hedge grid strategies 9 days ago, analyze how they have performed until today, how to continuously optimize them, and how you can also do this without having to sit in front of your screens for hours and hours. For this, I'm using a tool called Wundertrading.com, which allows me to set up, backtest and optimize grid bots for the different crypto exchanges I am using. If you want to use this tool as well, you will find a link in the description and pinned comment of this video that will, by the way, also give you a 10% discount on their plans. First thing you will notice are two segments. One is called Popular, where you can find predefined, ready-to-use bots with a corresponding strategy, for example Hedge Grid or Classic Grid. In addition to that, you can choose from futures and spot trading bots. I am concentrating on building a bot that trades the future markets for me, so I click on Advanced. You can now see quite a lot of settings that are available, allowing you to adjust your personal bot to what you like the most. In my case, I want to create a hedge grid on Bitcoin US dollar TIFA with a lowest grid price of 45,000 US dollars and a highest grid price of 88,000 US dollars. Now I have to select the profit or distance between each of the grid lines and the trade size per grid line. You can see here also that when I change the number of grids from 22 to 50, that the profit per grid changes from 3% to 1.35%, basically making my bot more active. One of the very cool things about Wundertrading is that I can now backtest how my bot would have performed in the last 15 days of trading, and you can see that my bot would have earned 76 US dollars for me. Now, why only 15 days of backtesting? Would it not make more sense to backtest the strategy on as much data as possible? Under normal circumstances, I would always answer, yes, you have to test your trading strategy on as much data as possible. However, as grid trading strategies are very sensitive to changes in trend and volatility, plus over time will start to accumulate positions with unrealized losses, it is, in my opinion, essential to adjust a grid trading strategy to new and updated settings at least every 2 weeks, even better every 7 days. From my experience, this really is the essential part of being successful with grid trading strategies. One very nice feature of Wundertrading is the possibility to automatically optimize my trading strategy to what would have been the best setting for my selected grid range. This basically takes the effort of adapting my strategy to the latest real market volatility off my shoulders and is really overall a very, very useful setting. I can then also apply these optimized settings with just one mouse click. I then just activated the bot by clicking on Create Bot to let it start to automatically trade my strategy on the exchange I connected. Later that day, I, by the way, created another bot with 100 grids instead of 55 to kind of see how the two would differ in performance over the course of the next couple of days. One thing you probably noticed is that I just chose an investment of $100 per grid despite having $10,000 on each account. General rule of thumb to stay on a more conservative side is to divide the total amount of money you are using for a grid strategy by the number of grids. So, for example, $10,000 divided by 100 grids equals $100 per grid. This is, of course, if you wish to not utilize any leverage at all. If you are planning on using leverage, you can, of course, adjust these numbers and, for example, use 250, 500, or even $1,000 per grid in your strategy. However, be aware that leverage will not just amplify your profits, but also your losses. Now, remember how I told you earlier how classic grid trading strategies are very sensitive to strong trending markets, and that I thought that hedge grid strategies are the better way of trading grids with cryptocurrencies? My theory actually underwent a reality check in the next 9 days, with Bitcoin performing by almost 14% to the upside and quite significant volatility to the upside and sometimes also to the downside. After almost exactly 9 days of trading, I rechecked on my two strategies to begin the process of optimization again, and saw that despite having such a strong upside volatility in Bitcoin in the past 9 days, the strategy still managed to produce some profits. Of course, these profits were not jaw-dropping if compared to the $10,000 that I used for each strategy. But the mere fact that despite market conditions that usually are deadly for grids, my strategy still managed to stay in the green numbers showed me that my theory on the benefits of using hedge grids is working quite well. Under normal circumstances, with more sideways ranging markets, we probably would have seen something between $70 and $120 per strategy in profit, which is a very good performance taken into account the very conservative settings I had chosen for the strategies. So, in summary, using a hedge grid strategy, not going too crazy with leverage, and optimizing plus restarting your grid trading strategy every 7 to 14 days can, in my opinion, help you to get the best out of your own grid strategies. That brings us to the end of today's video. If you want to know how the performance of my grids continued, and you do not want to wait for the next video update on them, plus you want to know which settings I'm currently using, feel free to join my Telegram channel dedicated to these strategies. Also, make sure to leave me a like and subscribe to my channel. That is the only way actually the YouTube algorithm notices small channels like mine. Until we see each other again, happy investing.